Hey, Market Chameleons. Thanks for joining us for another pre-market show. How are you doing, Dima?
Pretty good. Good morning, Will. Good morning, everybody. Thanks for joining us. I guess we could get
some good technical difficulties this morning, huh, D?
Yeah, today, yeah, we had to reboot a couple times, but
oh my
that's
God.
Okay. I think it's also a lot of schools are starting today. I know my kids, they're all on the Zoom right now, taking their classes. So
yeah, could be it. Who knows? Thanks for joining us, everyone. Remember, thumbs up and subscribe to the channel. If you're new, you'll get alerted to everything. And with that, let me get right to the disclaimer, D, so you can see that as you go through your morning disclaimer for everyone.
Good morning. So everyone, keep in mind, Will and I, Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional help, then contact your registered investment advisor or contact your broker. They should be able to help you answer your questions. So there's the disclaimer.
Awesome. Well, let's get started right away, buddy.
Okay. So let me just share my screen real quick. And these are the things I wanted to cover today. So we'll go over what's moving in the pre-market hours. As usual, I want to take a look also what's coming up in the earnings front in the next 2 weeks. We'll take a look at that from a options perspective. Let's try to cover today also any large open interest changes in the calls. We'll take a look at the unusual option volume, and then we'll take a look at trading ideas in the vertical credit put spreads. So let's see if we could get all that in today. And of course, if you have any questions coming into the chat, let me know along the way, and we'll try to answer those questions as well. So if you guys are joining us for the first time today, welcome. This is the pre-market report, and what we're looking at is stocks that are actively trading prior to the market open. We got the most active stocks, the biggest percentage gainers, and the biggest percentage decliners. And the first thing, let me just take a look at what's moving in the higher cap stocks. So anything 50 billion or above. So I see up top here, NVDA up 6.4%. Looks like it may have had some news, an upgrade, I believe. JD, that's like what is that, like a Chinese tech stock?
Chinese internet company, yeah.
Internet up 3.1% in the pre-market hours. I see Apple up 2.5%. That's, I think, hitting the new 52-week high. QQQ, SPY, I think they're all hitting 52-week highs right now in the pre-market hours. Let me see going down here. AMD up 1.8%. Walmart up 2.2%, also in the pre-market hours. So that's what's going on today in the high cap stocks. Let's do the unfiltered report to see what's popping up top. TSLA, that just jumped up 21.7% in pre-market hours. That's a low cap stock, $9.8 million market cap stock. That's Guess up 19.5% in the pre-market hours. I think they just reported earnings. So we'll take a look at the price action in Guess. VRA, that's up 17.7%. And there's another one I thought I wanted to take a look at before, but let's take a look at GES, what's going on in that stock in the pre-market hours. So we can see here, closed at $12.01. Trading in pre-market hours, $14.38, up 19.7% on 337,000 shares trading hands. This is what the chart looks like in the pre-market hours. These are 1-minute VWAP bars. The longest VWAP bar I see is between $14.86 to $15.10 on 143,000 shares trading hands. And here's the news. If you guys want to go take a look at what they reported in earnings, what management is saying, we're not going to look and interpret the news. Let's just take a look from a historical stock perspective. What did the stock tend to do after reporting earnings? So here are the last 12 earnings releases. Here are the dates. These are the price activity before earnings, day of earnings, and coming out after earnings. So we see here that tended actually to open down more often than up, but on average, the gap move to the upside was 1.9%. So we see here that it has had pretty big gap moves to the upside. And it looks like the average move up or down in the morning after reporting earnings is 10.8% with a high of 25.5% over here on March 18th when reported earnings. That's compared to today's 19.7%. After the opening, this is what the stock tended to do on average. So from the open to the high of the day, the average move was 16.4%, although I see it's very volatile here, as high as 124% on that March 18th earnings release. From the open to the low, the average move was down 6%. From the open to the close of the day, it looks like it tended to drift higher more often than lower, 55% higher versus 45% of the time lower. I mean, almost 50-50 with an average gain of 6.2% from the open to the close of the day. That's in this stock, GES guess. So that's a really quick price action analysis and historical price distribution around earnings. Let me see if I thought I saw another one in the morning that was notable, but this list just updated. Here's DocuSign. That's up 7.6% in the pre-market hours. I think it had a large gain yesterday because of, following that Zoom news. So that's reporting, I think, that's coming up with earnings soon. So we might take a look at that. If nobody has any questions on the pre-market stuff, I might go just to the earnings.
That's great. We did have a question around earnings, just to keep in the back of your mind. We had a new chatter who just popped in. I've never noticed, but he may be new. Actually, no, it's Pavel. Pavel's been on before.
Okay.
He's asking about screening he's someone who likes to look for selling straddles and strangles.
Okay.
Around earnings. If it's something you could look at, that'd be great.
Okay. So this report here, and this is one way to start the research, but there's different ways to analyze, and we have different screeners. But let's just stick with this one. I'll show from this perspective how to do it. So here, these are stocks that are expected to report earnings in the next 2 weeks. I'm going to filter it out with stocks that trade on average 10,000 option contracts or more. So that's what I'm doing here. And let's take a look at what pops out, what pops up, and see. This is what the straddle is pricing the expected move. So I think that's what he was talking about, the straddle. And we're going to compare that to the historical average moves of the stock after reporting earnings. So here we have CRWD. That's expected to report September 2nd after the market close. The current implied move up or down is 16.9%. That's what the straddle's pricing, buying a call, buying a put at the money. That compares to the last 4 quarters. The average move up or down is 10%, and the average move in the last 12 quarters is 11%. So we see the current straddle is pricing at 6.8% above the 4-quarter average, 5.9% above the 12-quarter average. The high move in the last 12 quarters on that stock was 17.4%. CLDR also reporting tomorrow after the market close. That's pricing in based on the option straddle an 18.8% move in either direction. That compares to 4-quarter average move of 9.2% and a 12-quarter average move of 15.7%. So we see 9.6% above that 4-quarter average, 3.1% above the 12-quarter average. The high move on that, 40.8%. That might be a newer stock out there, 40.8% move in the last 12 quarters. So that's a monster move. A thing here, let me just take a look. If you wanted to really quickly also reference here, you could take a look at how the straddles performed in the last 4 quarters. So these are the actual average returns in the last 4 quarters. If you bought the straddle and held it for 1 day after the earnings. So you could take a look in here really quickly, and then you know, as a reference point. Or what I might do if we have time, I'll show you how to screen it from the historical options.
Yeah, that's what Pavel would like to see. He just
Okay.
All right, cool.
Yeah, so all right, let me do that really quickly. So if you go here under the earnings option strategy screener, so this shows you from a historical perspective what strategies tended to work, didn't work, what were the average returns, standard deviations. So it's a really quick look historically, you know, how strategies tended to work in that same stock. So you could actually do all the strategies or pick which strategy you want over here. So you see, you got an entire list of strategies here. I think he was looking for long straddle. Was that
He was actually looking for the short side of the straddle, is what he was looking for.
But short at the money straddle. So let's take a look at from a short perspective, short at the money straddle. You know, let's say it tended to work 70% of the time or more. On average, if you did them in the last 12 quarters, you got positive. Let's say you got positive returns of at least 10%. You could do it like that. Median return, you could do also 10%. So I don't know if he has a watch list or not, but let's just take a look at like higher cap stocks, 50 billion or more. So here it'll filter out. This is back testing short at the money straddles and different time ranges of open and close around earnings. So you can see here, Adobe short at the money straddle opening in 1 week before, closing it the day right after reported earnings, end of day. That tended to work 75% of the time for an average return of 20%. Here's the median return, the best return and worst return, and your standard deviation of returns. That's your Sharpe, taking your average return divided by standard deviation. So really quickly, you could kind of just go in here and look from a historical perspective as your reference points. Obviously, that's not taking into account today's market. That's only looking from historical perspective. So anything that's changing today in today's market, you got to then consider that, today's prices or any kind of news today. But if you just wanted to filter out, like say Amazon, you could type that in there, and you know it'll show you the Amazon short straddle, opening different days, closing different days, win rate, average return. So I think that might have been what he was asking.
Yeah, that was great.
Okay. Let's move on to open interest. Okay. Let's take a look at what yesterday. I'm going to filter out call options where we saw a long buildup in any call options according to the open interest. So let's take a look at open interest that increased by at least 1,000 contracts or more on that option. We're also going to set that open interest, the increase had to be on a relative basis equal to at least 20% or more of the average daily option volume in that stock. Also, let's take a look at call options. We're going to look for options that are at least 25 cents or higher in price, and that the option increased yesterday by 10 cents or more. Let's take a look at the implied volatility in that option increased by, let's say, 20% or more. So here we have we got like 25 of them. Let me try to narrow it down more. Let's try stocks above 10 bucks. So I got like still 23 of them. So let's just take a look at what's going on in a couple of them at the top. So AMBA, that stock was up 9.5% yesterday. October 16th expiration, the 55 call. You know what? Let me also narrow it down. Let's look at calls that are at the money or out of the money. So I'm going to give it deltas of 0 to 50. Let me see if that 17. All right. So these are looking at calls that are at least at the money or calls that are out of the money or strikes that are above the current spot price. CRW, that was up 14.3% yesterday. Looks like the 175 calls in the September 18th expiration. They had earnings. They came after those. That option was up $5.97 yesterday. Implied volatility was up 43.6%. Open interest on that line increased by 7,086 contracts, which represents 23.3% of the average daily option volume in that stock. So let's see what happened there. So they reported earnings up 8.5% today. FIVE up 4.5% yesterday. Looks like they came after the September 21 call. In September 4th, that's expiring in 2 days. Looks like they also came out with earnings today. So all these little E's are stocks that are reporting earnings. They came for that option closed at $2.52 yesterday. The implied volatility was up 20.1% in that option. Open interest increased by 1,075 contracts, which represents 48.7% of the average daily option volume in that stock. Let's just see if they reported earnings. Looks like they're up 2.3% in the pre-market hours. Let's look at NLS. That one didn't report earnings. Let's see what we're not expected to report earnings. Or they already, let me see. So I don't have an either. Let's take a look what happened here. So NLS up 16.9% yesterday. Looks like in the September 18th expiration, the 15 calls, that option closed at $1, up 78 cents yesterday. Implied volatility up 22.9% in that option. Open interest increased by 1,478 contracts on that line, which represents 128.5% of the average daily option volume in that stock. That's our, again, the long buildup. Let's see if anything going on today, up 4% in the pre-market hours. So we see about 17 more, but I just try to cover a couple, ones that are at the top. A lot of them look like these are options people are building up going into an earnings report. Let's take a look at, if there's no questions, I'm going to go to unusual option volume, Will.
All right.
So this is yesterday's unusual option volume. Let's take a look at a couple of them. So so I see Zoom here, it traded $1.5 billion worth of call options versus $217 million worth of put options. That stock, I think that reported earnings was up 40.8% yesterday. Let me see if it's doing anything here in the morning. So down 1.9%, but that's following a huge monster move. Yesterday, SHLL traded that traded 3 times its average daily option volume yesterday. $24.5 million worth of call options trading versus $2.3 million worth of put options trading in notional terms. That stock was up 24.2% yesterday. Let's see what that's doing in the pre-market hours, up 8%. Kodak, I think that one hit the news yesterday. I remember in the pre-market hours, that traded 4.3 times its average daily option volume yesterday. $11.4 million worth of calls trading versus $9.2 million worth of puts, up 22% yesterday. Let's see what it's doing today, kind of unchanged. DocuSign looks like traded 7.1 times its average daily option volume yesterday. $476 million worth of calls trading versus $52.4 million worth of puts trading. That's reporting earnings tomorrow after the market closed. It was up 20.5% yesterday. Let's just take a look what it's doing now, up another 7.1%. Let's do this last one, NLS. Looks like traded 9.8 times its average daily option volume. This is some small market cap stock, 415 million. This stock was up 16.9% yesterday. It traded $3.2 million of calls versus $10,000 in notional versus puts. Let's just see if that's doing anything in the pre-market hours, up 4.7%. So these are.
Yeah, I hate to bother you in the midst of your presentation, but we got a new chatter who's asking how you got to that screen. I just wanted to let him.
So this one under the options menu, it's the first one item here, unusual option volume.
Awesome.
That's really quickly how to get to that one. You also have different views and filters. I didn't even use any of the filters today, where the views just kind of read off the top of the report. If you don't have any other questions on this one, Will, I'm going to go, let's get to the credit put spreads then.
All right.
So we're good?
Yep.
All right, let's take a look at credit put spreads. So we're going to filter out these have a bullish outlook, the selling put spreads, and I'm going to use one of our preset filters here. Let me take a look at today. Let's take a look at how the market leaders are doing. So these are going to look for ideas and stocks that are market leaders leading the S&P 500 higher. It's going to look for positive theoretical edge credit put spread. So over here, we see on the top of the list, Microsoft closed at $227.15 yesterday. It filtered out the September 11th expiration, selling the 225 put, buying the 220 put for $1.79 credit. We think it's worth 86 cents. So you're selling it above that. That gives you a 29% theoretical edge with a historical win rate of 80.1%. We see here, if that stock, Microsoft, remains above the 225 strike, so it's already above there. If it is above the 225 strike on September 11th expiration, that's a 55.8% return on the money you have at risk. So you're risking $3.21 to make $1.79, 55.8% return in, like, what is that, like a week and a half, something like that. Facebook closed at $295.51. It filtered out also September 11th expiration, selling the 292.5 put, buying the 287.5 put. That's for $1.90 credit. We think it's worth $1.08 based on historical data, historical returns. That gives you a theoretical edge of 26.5% with the historical win rate of 77%. If that stock remains above 229.5 on September 11th expiration, then, and it's already 295.51. In other words, stock sits here, goes higher, or even if it goes lower, it doesn't go below 229.5. That's a 61.3% return on your money at risk. And you got a 1.7% cushion to the downside. Apple closed at 134.49. That's looking at the September 25th expiration, selling the 135 put, buying the 130 put for a credit of $2.40. We think that's worth $1.17. That gives you a 47.3% theoretical edge. See, you're selling this 240 above the 117. Historical win rate on that is 76.2%. With, if that stock is above, if it actually is at this price or higher, if it's flat here or higher, then your return on the money at risk is 72.5% on that spread. Let's do a couple more, unless you have questions coming in. Will, Visa?
Oh, that's fine. Go to Visa.
Yep, Visa. That closed at $213.35. We're looking at the October 2nd expiration. So selling 212.5 put, buying the 207.5 put for $1.70 credit. We think it's worth $1. That gives you a 21.2% theoretical edge with a historical win rate of 78%. If that stock remains above 212.5, so we got 213.35 right now, remains above 212.5 on October 2nd expiration, that's a 51.5% return on the money you have at risk. I could do, let's do two more. If you don't have questions, I could move on to a different report.
Yeah.
Johnson & Johnson up 151.30. I'm sorry, closed at 151.31. That's looking at the September 25th expiration. Selling the 149 put, buying the 144 put for $1.13 credit. We think it's worth 39 cents. theoretical value is 39 cents, gives you 19.2% theoretical edge with a 90.3% historical win rate. That gives you a 29.2% return on your money at risk if on September 25th expiration stocks above 149. Let's do the last one, Walmart. That closed at 147.54. Looking at the September 18th expiration, selling the 145 put, buying the 141 put for $1.51 credit. We think it's worth 39 cents. That's a 45% theoretical edge with a historical win rate of 89.8%. If that stock remains above 145 on September 18th expiration, that's a 60.6% return on your money at risk. So that's really quickly credit put spreads. From the credit put spreads, I could jump now to, let's take a look at the stock screener. Let's see what's going on in the stocks, and let's see some momentum stocks here. So these momentum stocks, these are stocks that are in the last 6 months, 3 months, 2 weeks, they're making higher lows and higher highs. So they're in an uptrend, making higher highs, higher lows. So let's see what made the list so far. So we got Amazon here in an uptrend, Microsoft, Google, Facebook, Baba, Apple, Berkshire Hathaway, Visa, Walmart, MasterCard, Procter & Gamble, NVIDIA, SPYs in there, Home Depot, Adobe, CRM, PayPal, Visa, Disney. So a lot of them, like right now, you know, this is a full list. These are momentum stocks making higher lows and higher highs. The assumption there is that there's a strong underlying bid behind that rally. Let's take a look at what are the market leaders right now. Stocks leading the market higher in the S&P 500. We got Amazon, Microsoft, Google, Facebook, Apple, NVIDIA, Home Depot, Adobe, Salesforce, Netflix, PayPal, Advanced Micro Devices. Let's see the laggards in the S&P 500 right now. So laggards right now are JP Morgan, Bank of America, Intel, Coca-Cola, AT&T, ExxonMobil, CVX, Citigroup, Wells Fargo, Boeing, US Bancorp, General Electric, and Edwards Lifescience. Those are the S&P 500 laggards. So that's giving you an idea what's moving things higher, what's lagging the rest of the market.
Hey, D,
yep.
When you were looking at the momentum stock, something popped up which reminded me we had a question from Ahmed and Jen. We're having a question about SPY at the beginning. I'm wondering if you could show them how to look at what the cost of I don't know, hedging your SPY or looking at the downside skew. If you could walk them maybe through that with SPY. You know,
okay. What was the question they had? Just so
well, they're worried about risk to the S&P 500 to the market, and they, you know, like where's the skew relative to its history, volatility, that type of thing. Okay.
All right. So just why it's in a momentum, why it made the momentum. Let's do that first. So as we can see here, this is how SPY has been doing in the last 6 months, 3 months, 1 month, 2 week. So we see here, you know, it's been making higher lows, higher highs. That's why it's in a momentum. Let's take a look at some of the benchmarks for SPY. So here, this is, let's just take a look at the, what was she looking at? Just like let's take a look at the cost of the straddle. So this is the cost of the straddle from on a 1 year basis. So right now, if you bought the 30-day straddle, so 30 days to maturity, it would cost 4.3%. So 4.3% for the cost of the straddle, moving in either direction. That compares to a 52-week average of 4.9%. So right now, price below that average. Let's take a look out 60 days. 60 days, it's 6.8% versus 52-week average of 6.9%. 90-day. So as we go out further, you know, it's priced a little bit higher than the 52-week average. So 90 days out, 9.4%. The cost of the straddle, that's the premium, versus a 52-week average of 8.6%. 120 days out, it'll cost you 11.1% versus a 52-week average of 10%. So it gives you kind of an idea what the cost of that straddle is, and on different maturity dates, you can compare really quickly to 52-week average. Let's take a look at the risk reversal. So the risk reversal is buying the 5% out of the money call versus selling the 5% out of the money put, right? So this is kind of looking at the skew. So right now, for 30 days, it looks like you would get a credit of 0.6%. And that compares to 52-week average of 0.6%. So right at the 52-week average right now. Let's take a look at 60 days out. 60 days out, buying a 5% out of the money call, selling a 5% out of the money put, you would collect credit of 0.9%. That compares to a 52-week average of 0.8%. So really, right, kind of right there at the average. 90 days, same, you get 9.9% credit versus 52-week average of 0.8%. So there you have it.
Awesome job.
As far as the risk
Awesome
reversal
job.
goes. Okay.
That was super helpful. We're right at the starting bell. Any last words for the chameleons, D?
No, thanks everybody for joining us. Thank you for the questions. Hope you guys have a great trading day and hope to see you tomorrow.
Awesome. Stay safe, everyone.